Folks, normally speaking, a week that had CPI in it would be the headline news. Obviously, that's not the case this week because of what we had on Friday with Silicon Valley Bank, what we may be having with other regional banks here shortly. But we do have CPI. CPI headline inflation, last reported 6.4. Expectations I just saw in your report, Dan, is 6%.
Right.
It is going to be interesting. What did you see what happened to the 10-year note on Friday? I have never seen a day where the 10-year note fell 24 basis points in a single day. What a wild ride. Where do you want to start this conversation?
That's an interesting conversation right there, actually.
Okay.
Because this is going to destroy some of the bull thesis, actually.
Yes.
I mean, one of the things that Tom Bowley has been saying is if the 10-year rate goes down, then technology stocks will go up. But I would suggest that it depends on the reason that it's going down.
Correct.
If it's going down like it is now, because everyone is fleeing to safety,
that's not good for tech.
Everybody's buying bonds because they're afraid that everything's going to crash soon. That's not going to be good for the whole market, not just tech, but everything.
Correct.
So
yeah, I would ask you to look up the savings and loan crisis. That's just a lot of research I've done the last 48 hours. Long story short, the banks were capped heading into that crisis at a certain interest rate. They could not pay enough. Then Volcker did his thing. Guess what happened? People took their money out of banks.
Right.
They put it in treasuries. Suddenly you had balance sheet holes and you had 1,000 institutions fail. Kind of where we're at now.
So take that in combination with Lehman and Bear Stearns failures.
Fear. Like fear that I remember watching Bear Stearns and people walk out and how afraid we were. And I had no money to speak of.
Right.
I remember how that fear. I remember the .com crash. I remember layoffs. I remember getting ready to go public. 9/11 happened, and 45 days later, I'm laying off 40% of the staff. I know fear. I know what's coming Monday.
Yep.
This is going to be bad.
By the way, I had to do that too. I was VP of sales of a startup that started in 1999. And I hired a bunch of people, and then I had to fly around the country and lay them all off.
I remember, yeah.
And then 2 months later, I got laid off.
Yep. Yeah. It could be. So yes, I remember 2008, but again, I think a lot of people have recency bias. Please go to Investopedia, Google search savings and loan crisis, because again, our job is to educate, help you understand what's possible, because again, you make money when you buy. There will be opportunities. I will start hunting Monday afternoon. I don't know if I'll buy, but I will start hunting because I buy when shit's on sale.
Yeah, there was it's interesting that a lot of people haven't lived through this and don't understand, what could happen.
Yep.
There was a note on LinkedIn. Person said, they were trying to explain the SVB thing, and they said this has never happened before.
Come on.
And I said, wait a minute. 15 years ago, Lehman Brothers and Bear Stearns, it happened then. I mean, and I would suggest that the reason for SVB crashing is a result of an indirect result, maybe, but a result of Lehman and Bear Stearns crashing.
Sure. Yeah. I mean, you take interest rates to zero, you hold them there too long.
Right.
Then
take
then you have inflation.
Interest rates to zero and hold them there for 15 years.
Yeah, it's of course. Bad habits happen. Of course.
There are people in their 30s that don't remember that interest rates haven't been zero.
Yeah, they don't remember getting interest in a savings account. Yeah, you're right.
So, you hold interest rates at zero for that long, then companies get used to investing, expecting that to continue.
Dude, and that's what happens. A generation of managers, directors that never experienced this.
Right.
Yeah.
So that's what happened at SVB. And I explained the reserve fractional banking system on the last video. If you want to learn about that, go back to that. But that's what's happening now as well. And it's happened before, and it will happen again. You
Yeah.
just have to understand the cycles.
Yeah. Dude, I got to tell you that chart on the right, lower
Right.
right of the
Yeah.
screen, there's no, and actually the good news is I told my audience there was no chance of 50 basis points last Wednesday. It was all theater, but there's got to be zero chance of 50 basis points come to whatever it is, the 23rd or whatever.
That's right.
Zero.
So let me first, since you mentioned that, let me first show my, let's see, where is it? This one. All right, so I'm going to show the two charts that I look at for CPI. CPI comes up Tuesday.
Correct.
Normally that'd be the main
Yeah, normally that'd be the headline.
right? And PPI is next week also.
Yeah, Wednesday. Correct.
So these are all the rate hikes right here.
Mm-hmm.
We started from basically zero.
Correct.
And in 1 year, we've gone up to 4.57.
Mm-hmm.
This is the next one coming.
I agree.
I've got a question mark there, 25 basis points.
It's funny. It's last Wednesday, everybody was talking a half, and we're going to have a terminal rate of 6 or 6.5. And I'm like, you guys are not paying attention. That's not coming. Now people are talking about a pause. That's not coming either. Jerome Powell is going to give us a quarter in 2 weeks.
Yes. Yeah. He doesn't really have any choice.
He doesn't have any choice. No.
The other thing to look at, these are some of the commodities, all except gasoline went down in the month of February. That's what the next report we'll be looking at, February. Yep. The gasoline went up a little bit, but everything else went down. This is the CRB is all these commodities, agriculture, energy, industrial, and precious metals. Mm-hmm. All right, so there's point one of why the CPI number will come in, I think, and we talked about this last week as well.
Yeah, you still think 5.9? You still talking nonsense and crazy?
I am talking a 5 handle.
Oh, you're talking 5 handle. You're not even saying 5.9. You're not talking like 5.8, 5.7.
Yeah, it's going to be 5 something.
You're getting crazy on me.
Right now, the forecast is for 6.
Oh, dude, jeez, people. So I'm going to call it right here, right now, 6.2.
Yeah, I don't think that will happen.
Okay, I think CPI. Let me be clear. CPI, I hope you're right.
I think CPI will come in better than expected, meaning lower than expected.
Look at those month-on-month numbers, though. Wow.
Yeah.
Still core. Core is the one that's the big problem.
Core it's still high.
Yeah. Wicked high.
Yeah. Make no mistake. It's still high.
And that's why you're going to get a quarter a week after. Yep.
That's why we'll get a quarter, even though he probably would like to do a half, but we're going to get a quarter.
He can't do a half now. There's no chance. That's funny. Yeah. No chance.
And then let's look at this one.
Yep. Base effect. Yep.
So this is the base effect.
This is why you're calling a 5 handle, because most people miss.
Well, it's both of those combined. It's the fact that the commodities went down slightly. Most of them, except for gas, went down in the month of February. But this is the big part of it right here.
Yeah.
So
this is possible.
This is what will drop off in the March report. A big, huge gap right there.
Yeah.
Went from 7.9 to 8.5.
Yeah.
That's gonna go away.
Mm-hmm.
All right. I believe we will get a 5 handle. I don't know if it'll be 5.9 or 5.1.
5.1. Come on now. Stop it.
But it will be 5 something.
5 something. Okay. All right. I like it. I like confidence.
All right.
I like guesses.
So let's talk about next week in that context.
Okay.
Monday we're going to probably have a bloodbath.
Yeah, Monday will be ugly. Fear in the market. Nasty.
It could open. I don't know if it'll open up or open down, but it could open up with short covering. But then I think by the end of the day, it's going to be down.
That's funny.
Yeah.
Okay. Yeah. So Monday's bad. So again, let's play Tuesday out. Tuesday CPI. Let's assume, just playing a game, CPI comes in at 5.7.
Okay.
Let's also assume, since we're playing games, we have our second regional bank that's under FDIC
receivership.
Yeah, receivership. Thank you. What do you think happens?
Oh man, that'll be a tough one for the market to digest.
I think when in doubt, Dan, fear wins.
Yeah, I think so too. I think the I think the VIX has a lot more upside to go.
Juice. A lot more juice in that orange to squeeze. Yeah.
I think what will probably happen if we get a receivership announcement on Monday,
Yep.
and we get a 5 handle on Tuesday, I think the market will go up in the beginning and end lower.
Okay.
And then sell off the rest of the week.
Yeah, I think, again, I've been here before. I've seen this movie. Fear has started, but we haven't crescendoed.
Yeah, and a lot of people,
builds all week.
It was really only 48 hours last week.
Yeah,
and
shit. Yeah,
really,
36.
it really was Friday that should have put the fear in everybody, because you couldn't trade SVB.
Yeah, which most people don't even realize, right? I think the weekend stories of people not getting paychecks and, you know, this, that, the other thing, and then if another one happens on Monday,
right?
Oish, oishka. Yeah.
Yep. I think everybody's just going to say, I'm done.
I'm done. I'm out. And that's how you get bottoms, and that's how you buy stuff on sale.
That's exactly right.
And I will go shopping.
I've said that for a while. I said, I'm waiting for the time when everybody says I'm done with stocks. I'm never getting back in again.
You and me both.
I don't ever want to buy another stock.
Yep.
That's when you want to buy. By the way, I'm in cash.
Yeah. Oh, that's good.
And I got an email from one of your subscribers thanking me for teaching him about stop loss orders.
Oh, that's awesome. Stops are the key. Absolutely.
I hope
stops and position sizing.
And position sizing. But I hope that for anyone that's not a long-term holder, I hope that they're using stops. And if they are, they should all be in cash now.
Yeah, you should have been.
Unless they bought something at ridiculously low prices and you got lots of room still.
Yeah. Yeah. I like my Meta position. I'm glad I got into Meta a couple of tranches.
Meta, JP Morgan. Yeah.
Yep. Yeah. I'm happy.
Yeah. All that. So let's see. What else did I want?
So let's play this out. So again, we did your thesis. Now let's pretend it's my thesis. Monday happens. We get another FDIC announcement, and then CPI prints at 6.4 or worse.
Okay.
What happens?
Katie bar the door.
Yeah, it's funny when I look at that scenario, I don't think it's going to matter because I think everybody's already afraid. It'll probably impact the institutions some, but I see mom and dad eyes wide open, totally afraid of the dark, just sell everything. I think a bad CPI print doesn't faze them. They're like, I'm already out. This shit's rigged. It's a casino. I'm out. That's what I see happening this week.
Yeah, I think that's very possible. That's capitulation. That's what you're. Yeah, that's what you
absolutely actually, right. Capitulation.
Actually,
and I will go shopping as I'm trying to. I told my audience today in my daily financial news, point number 1, just take a deep breath.
Right.
Like most of you watching this are not directly impacted by SVB. You won't be directly impacted by the next one. Most of you have your limits below the FDIC limit. And if you guys don't know, FDIC has a 100% success record of paying every penny that is owed to the insured portfolio. And they will do it again at SVB. Right. So just be a good steward of your capital and take a breath. Take a
250,000.
Yeah, just take a breath.
Going back and looking at VectorVest, I mean, a lot of the charts are damaged. We talked about that in the last session.
Oh, it would have to be. They would have to be.
Yeah, this is a very clear picture of what a damaged chart looks like. You can see this uptrend right here from October, right? Market came down and touched it, came down and touched it again. We were flirting with it on Wednesday.
And then boom. Thursday.
And then that's it. The floor got pulled out, and
you'll have more to come. Yep.
And we'll have more to go. And I definitely think we're headed lower. If we look at this one right here, by the way, this is a VectorVest. They've got a pretty good record of identifying the lows and the highs. So this was the buy point right here. They went to a sell right here.
Oh, good for them.
On February 21st.
It'll be interesting when they flash by again. That will be interesting.
Yeah, right. When this flashes by again, I mean, there are some people and some very respectable people that I respect a lot that use VectorVest. And one guy in particular that's been trading, I mean, the guy's in his 70s. He's been trading all his life. He really knows what he's doing. And I listen to him every Monday. And he says he will not buy anything until this gives a green signal.
Just sits in cash.
Sits in cash. I mean, he won't catch the absolute bottom.
Yeah.
And he won't catch the absolute top.
Yep.
But it will get him in and out. And then he'll put, other strategies to play. But this is the first thing he looks at.
Nice.
And right now, and I mentioned this a couple of weeks ago, when the first signal is above this white line, the 30-day weighted moving average, we actually got that. This is on
Monday, maybe
March 3rd. So that was 2 weeks ago. That was last Friday.
Okay.
So we got the first potential buy, but it didn't actually trigger a buy because this one down here did not go above zero. And I said that at the time as well. And I said, you can't anticipate the signals.
Right.
Don't say, guess. It's going to give me a buy tomorrow, so I'm going to buy today.
Yeah, never did.
Well, you can see what happened. It's a long way away from a buy right now.
Yeah. Okay.
So yeah, we could still have a long way to go, actually. By the way, if I look at this, and we can look at sector scans, we can look at the finance sector.
Yeah. One thing I can tell you the audience will be looking forward to you is your midweek update. Thank you for doing that last week. I think that's become something the audience really appreciates.
Yeah. These are financials. And I'll sort it by VST. So these are the ones at the top. This isn't just regional banks, by the way. This is all financials.
Yeah, it's all financials. Yeah, I can see that.
So these are the ones at the top. Interactive brokers is number one. Again, if you're looking at things to buy when everything sells off, and if we get a big spike in the VIX, and everyone is afraid, they're going to sell everything, whether it's good or bad.
They'll sell everything that's not nailed down. Yeah, absolutely.
Right. Capitulation will sell everything, the good ones and the bad ones. So what you want to look for are the ones that have actually held up well, or actually will hold up well. Even if they're selling off, they're not selling off as much relative to the other ones. Those are the ones that will recover sooner.
Yep.
And we can talk about that. I might actually look at that as we go through the week.
Yeah.
Try to identify some of those strong ones as the market sells off, so we can start to position ourselves.
Very cool. Well, this is going to be a very exciting week. Normally CPI would be the headline. It's going to take a huge backseat. We do have our numbers. Dan's calling for a 5 handle. I'll call 6-2 just because I like to guess, and we'll make fun of each other next week. One of us will be right.
I'll be
any
right.
other thoughts as we wrap this up?
Just this is the banking industry group. This is from Stock Charts.
Okay.
So this allows you to rank them or sort them based on their strength. Now, in this case, it's based on the intraday. So Friday's close, which one closed the most down was PacWest.
Wow.
PacWest,
So
Signature Bank,
somebody might know something somewhere.
Western Alliance, First Republic.
Oof.
Look at all 4 of those.
Yeah, not good.
They were the worst performers on Friday.
Yeah.
And there's Silvergate.
Yeah.
Silvergate is another one that kind of, it was a really bad timing for Silicon Valley Bank all around.
Yeah.
I mean, they waited too long to do the things they should have done.
Yeah.
But when they came out and they announced that they were shoring up their balance sheet, and they were going to sell some assets, and they were going to, get some funding, they made that announcement exactly the same day as Silvergate said that they're reorganizing because they can't meet their capital requirements.
Oh, dude, this is the week we've been looking for.
Just bad timing. Now let's look at the ones that performed the best on Friday.
Oh, there you go.
Republic First, JP Morgan.
Hey.
Tompkins, National Bank shares.
That's funny. I don't know a lot of these.
Right. They're probably, a lot of these are regional banks. This is all banks, but
Yeah. That's fine.
they're probably regional banks.
Yeah. I don't
but this
study
is-
the
this
stock
is-
market a lot, so I'm not shocked I don't know most of these.
Yeah, well, this is one way we can identify where we think the strongest ones might be.
Okay.
So
That
if
might
we
be a
actually
fun
look,
update.
we look at this one, First Republic. You know, it sold off Friday, sold off Thursday, it sold off Friday,
But came back.
but look at that volume. But it had a huge recovery. That's a hammer, that candle right there. I've talked about hammers before. A lot of times that's a reversal candle. So
Yeah, we'll see Monday.
we'll see. Yeah, Monday will be interesting. You know, I can't really, you can't trust the open. The open could open significantly down, and then, you know, this is the hard part. It could sell off big time at the open, and everyone jumps in on the short side, and then all the short covering comes in and
maybe,
you know, zooms higher, or the short covering might start right from the beginning and it zooms higher, and everybody might think, oh, that's it, we're done, it's over, we're going back up. But we won't. I think next week, the whole week, I think we're going to be selling off.
It's messy. Yeah. Well, Dan, I look forward to your midweek updates. Flash your newsletter one more time.
Hey, by the way, just
Sure.
as we're talking, one of my subscribers just sent me an email, and we didn't talk about this, but I meant to talk about this.
Okay.
It says the Fed has to cut rates.
No, they don't.
Yeah, they do.
Well,
I think they do. If you go back on my channel,
so hold on. Time out. The Fed has to cut rates eventually. Yes. Are you saying the Fed has to cut rates tomorrow?
I'm saying no. I'm saying the Fed will go 25.
Okay. So we agree on that.
They're locked in.
They're
They're not going to go 50.
No.
They're going to go 25.
Yes.
If next week we get more bank failures,
yes,
I think they will say we're holding here. We need to wait and see what the results of all of this are. We're not going to have any more rate hikes until we see what the effects are. If there becomes an avalanche of bank failures, the Fed will start cutting rates. And I don't know if you remember this, but I said that the Fed will get to this level in March, and then they will hold it, and by the summer they will be cutting.
You did. You're on record on my channel of saying the Fed's going to cut in the summer, which I made fun of you.
Right.
I did. I own that.
But I will tell you, I think they are scared to death that they're going to have another Lehman Bear Stearns moment on their hands. It's all psychological.
It is all psychological.
No,
most of this is psychological.
I talked about the fractional banking system and how fragile it can be in the last session that we just did.
Yeah.
The Fed does not want to be the ones that perpetuate that fear and have people taking their money out.
So let's play this out. So we both saw the 10-year note go from roughly 4 to, let's call it 3 3/4.
Right.
So we've talked about a bloody open. I'm going to guess the 10-year note could see 3.5 again next week.
Yes. Oh yeah, absolutely. No question. And it won't be a good thing.
No, it won't be. No, I never said it would, but it'll still see it.
I'd love to hear Tom Bowley, because he's still, saying that we're going to have a bull market. And he's pointing to the 10-year saying, look, it's going down. That means technology stocks are going to go up.
Yeah, sometimes you got to look at the macro.
Running the safety, they're buying bonds because they want to get out of everything else.
Tom Bowley, go research the S&L crisis. It was a decade of pain, buddy.
Yeah. We'll see. It'll be interesting. Yeah. I'll do a solo midweek update.
I appreciate you, man. Thank you very much. Bye.
All right. Have a good weekend.